Good morning, traders. It's 8:02 a.m. Chicago time on Tuesday, the 19th of March, 2024. This is episode number 2639. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, my voice is slightly better, not all that much better, so it's not a squeaky mic. It's just it's just my voice. Um, What are we looking at for today? Quick peek at the convergent trading pre-market summary sheet. Mild risk on sentiment. Pretty much, we do see that the Nasdaq is off 93 points. The S&P is off 15. The Russell off 12, and the Dow's off 30 points. Europe is a little bit higher. Europe got a little bit of good news this overnight session. What's on the market's mind? NVIDIA announces a Blackwell B200 AI chip, announces integration with Microsoft. In that conference with NVIDIA, there was just a lot that was announced. All kinds of partnerships, synapses, and all kinds of stuff. So there's a lot going on there. NVIDIA this morning down 2.31% after being up bigly yesterday with Google following that Apple news, and and so that's where we stand. Japan ends 12 years of negative rates this morning or last night. Also, the German zoo sentiment comes in quite strong in the European session. That came out at about 4 Eastern, no, 4 Central, 5 Eastern maybe. No, 6 Eastern, 5 Central. Zoo came in at 31.7 versus 20.5 expected. Canada's inflation number came out about a half hour ago. Inflation year on year showed 2.8% versus 3.1 expected. The expectation was an uptick from January to February. January's was 2.9, was expected at 3.1 in Feb, kind of in line with the U.S. It actually surprised to the downside, 2.8%. The core came in at 2.1%. Well, the year on year came in at 2.8 versus 3.1. The core came in at 2.1 versus 2.3. This is good news for Canada. Building permits for the U.S. Came in slightly better, 1.518 million versus 1.49 million, an uptick of 1.9% in February versus January, which had a negative 0.3. So that's about all there is. We still have the FOMC rate decision tomorrow. That's going to be important for today's trading because you know, we're going to sit around and wait for what happens. The S&P is on a multi-distribution profile this morning. Pretty active price discovery. We do have 200,000 contracts traded. The inventory is 96% short, and the range is 33 and a quarter points with the point of control at 5209. Currently trading at 5200. So we've checked below again the 5200 to 5186. We've done that before, and we're back at 5200 again with the point of control just above. So messy area is the point here for today. Very likely to be a relatively messy open. You could see two distributions. There's one up here. Oh, one up here, one down here. There's a line in the sand between them, and that line in the sand coincides with the full session VWAP, full session mid. The problem with this is that it's right on top of the 5200. So I'm watching very carefully to see what happens between 5200 and 5202. 5200, 5202. The low seems weak to me. Um, The low seems weak to me. We'll see how that plays out. But to me, this is very a pretty precarious position. If you recall, I'm not going to pull up the video from yesterday, but if you recall, yesterday the plan was, the expectation was, since we had a high right at the beginning of these single prints, what we call an excess high from last Thursday. This is a good selling tail here, very prominent. The expectation is we're very likely to continue to discover lower. When that happened, that was what was expected. Friday opened in a gap, tested value low basically. Oop, I missed it. Value low in this area and ended up with a balanced kind of choppy profile. But Friday was also triple witching and expiration. And then yesterday we opened right up against this excess, and the idea yesterday is that it is very likely to chop around, but if it pushes into the excess up here, then I'm looking for weak rotations down to go up to 46.47 as the key target, but the excess leads us into 41.50 first. So the idea is once we get into the excess, we're likely to zip through to 41.50 at least to the open. And what we did is we pushed right into the open of last Thursday, 40 and a quarter. We were unable to continue higher into the 46.47. That was my primary scenario. Expected some resistance here, some ping ponging, and then ultimately for it to break through the 52.50 and make new all-time highs. It did not do that. The secondary scenario is to test up slightly, push down, and then what we were looking for here is a push into a gap to settle trade. The volatility's not there though, so we didn't get that either. We ended up having a range extension to the downside, and we ended up finishing quite weak on what was yesterday a relatively balanced profile. However, the target for yesterday was basically not quite attained, but very, very close to what to being attained. This was the price we were looking for yesterday. We did end up pushing down. We did end up gliding along the VWAP here for yesterday and finishing weak. And then this morning we tried to pop back up, and we managed to drop right after the European Open. Okay, so we had a little bit of a pop here on the German zoo, and then it dropped right off, and you could see there's more participation, more activity now on this pullback, and it's against the 5200, so you're going to see a lot of that. Look at the delta for yesterday. There was just so little interest, so little aggression throughout the session versus, say, last Friday, where there was quite a bit of selling. So relatively balanced market. We saw the same thing despite the massive, kind of not massive, but big rally on that news, the Google Apple news. There was just relatively very little to deal with. This morning, same story, quite small, pretty flat delta on pretty good selling. So this is a market that is showing disinterest. We have the VIX falling. There's just not much to price in ahead of the Fed. So here we stand this morning. The overnight low is down here. The overnight high is right up against value low from yesterday. It just basically opened, tested up, came back down, popped higher on the zoo, and then came down, put in a weak low, and is trading right here with that dividing line right in this area. So this is what we have of the overnight session, but you could see that we're at the upper end of Friday. We still have a gap zone remaining from 52.02 to basically 52.10. It's a very precarious area to open in, as I said, with where we stand on VWAP and mid and this low volume node in between the profiles. So to me, this area here is a clear line in the sand as to which side is winning the fight. Do they get above 5200, 5202, or do they poke through and stay down here? In which case, this relatively weak low is likely to go, and then we start to work ourselves back down to 5170 from 5200, 5202, 5205, maybe something like that. This collision right here. So this is what I'm looking for as a primary scenario. The idea here is that despite the gap and push higher, the market is back to where it was on Friday. It shouldn't be here. If price is down here too cheap for the current environment, we should not be here, right? And yet here we are below the 5200. There's a significant amount of weakness, and that weakness actually started 2 Fridays ago with that engulfing day. This weakness started here. This was the day that started it. And then this is the day that threw us off. But what we've got is push, pull, lower high, pull back, lower high, like that. Okay, we can see it better on the composite chart. You can see there's this big selling, push, drop, pull back, lower high, and so on. And so now the 5167 is vulnerable. This was a double bottom in the old contract, double TPO low, and that becomes our key target for today, the 67.75. Okay, that's that for the S&P. The For crude, which is where the interesting action is, crude is on a run. Crude has consolidated for some time in this zone here. So we've gapped and held this, just beautifully held this, now adjusted. It used to be 78.50, but with the May contract, we have a discount of 46 cents, so it dropped to about 7,800, just under 7,800. You can see this point of control here. We traded around it above and below and kind of held it, and we're breaking away from balance. So like I talked about yesterday, crude, which opened at the low yesterday, I would not do shorts. Why wouldn't I do shorts in crude? Because even though it pushed up and came all the way back yesterday, in B period, it managed to push higher. The reason I would not sell this is because we're breaking out of a larger balance, and then we gapped up, held an additional day of balance, and we're gapping up above that. This is very, very bullish action for crude, and it's very likely to continue into the upper levels, 87, 90 as next key areas to test in crude. Crude is running away from these cheaper prices. Crude is likely to put pressure on the Fed and on inflation, and it's likely to introduce some volatility in the markets as the market has to reprice this kind of new information. Okay, the other one that's kind of interesting is gold. Gold has been a pretty decent trade. Gold has its days. So look at crude here. Very prominent, very valid. IB low, IB high, right? Breaks through, pushes out, comes right back to the IB high. Also, within these structures in crude, we have very clean, clear zipper pullback trades, and various other features. So it's a decent for scalping as well as for structure trading. Of course, I highly recommend you trade the MCL instead of the CL. It's financially settled. Don't recommend you go in and trade crude oil, the full contract. And then you could see the overnight session in crude was completely balanced. I mean, they're not willing to take any of this back, and we're opening basically against the yesterday's point of control. So we're holding, we've shifted and are holding value up here. Um, so this has been decent. Also, GC has been decent. GC has some, generally has some really good liquidity test type setups, this sort of thing where it tests, then it pops higher, rechecks the zipper, rechecks the zipper, comes right back into balance. I mean, gold is basically a currency, so it has a tendency to just revert back and revert back. So here's gold again, putting in a weak IB, pulling back to the day generated levels, looking for this thing to break and push into prior settlement. So, start thinking about diversifying the products you trade as long as you have a plan and setups. There's no issue with looking at different products while the ES kind of um, churns as it has been doing. Okay, I'll leave you with that. Good luck today. I'll catch you tomorrow. Hopefully, my voice will be better. Don't forget, tomorrow is the Fed decision. Um, the expectation originally was for the Fed to cut in March, but that's not likely to happen tomorrow. So, expecting a little bit of volatility on that announcement. Keep your powder dry until the announcement at 2 p.m. Eastern.